It's one of those things that never seems to happen on a sustained basis, that Europe can outperform the US. Can it happen?
It can happen. I think the key that we see here is now, after all these 10 years of strong rally in US, especially with the growth story, has kind of came into a halt in 2022 with the increased interest rates environment, significantly tighter central bank policies around the world, and the contraction and recession fears has been more accelerated in US than in Europe. Even though Europe has been experiencing a very hot war nearby, and we had a huge energy crisis at the initial part of last year, and it has been extending. So it doesn't mean that Europe is completely immune and is in a great shape, but in relative terms, the shift from growth to value actually gives a little bit more opportunity to Europe compared to US.
So Zeynep, let me be very clear about what you're saying, because I dangled the carrot that economically and markets as well. Yes. Are you saying in tandem, both economically and on capital markets, Europe can outperform?
Potentially, yes, because considering the diversification of different type of sectors in Europe compared to US, and the sustainable growth in terms of the production that we see, especially coming from Germany and also in France, is showing the case that Europe, from an economical standpoint, is having a more stable growth, although there is this significant headwind of inflation, core inflation, and hasn't peaked yet in Europe. But again, the diversification of different sectors and ability to increase the production is what we have just recently experienced with the data, showcases that Europe is potentially going into a relatively better position than US.
Just how stubborn do you think inflation will be for the ECB this year? I mean, 9.2% we wrapped up in December. I was looking at an ING forecast that says that the ECB's could be looking at 2% target on inflation by the end of the year. Could actually play ball and get back to those levels. That's extraordinary reversal if it happens. Do you think that is a potential for inflation?
It is possible, considering the fact that Eurozone is a significantly larger area, and there are certain countries that are, especially in the Baltics, are struggling with a significantly higher inflation compared to the rest of the zone. But if we look into the way ECB has changed tack, they were more looking towards the headline, but now shifted further into core. That means they are starting a little bit more hawkish, and they have been a bit more hawkish over the last two periods. So their target of 2% in real terms, I don't think is possible to achieve in 2023 or even the first part of 2024. But the core inflation being sticky and the production costs are significantly high due to the cost of energy, and the lag of the drop in the energy cost into production showcases that the core inflation will stay a little bit longer, a higher bit longer, and that's why ECB has to stay firm. But then the recovery can come in a much better shape.
Can we talk about growth? Because that's the other key component here. And we were just taking a quick look at Germany before, and some of the estimates are a little bit higher now, potentially for 2023 versus very downbeat expectations for contraction. And maybe it can eke out a slight bit of growth. We look at that potential, right? But perhaps also for further intervention from authorities at a government level. We know that in Europe, they've been very concerned about the IRA, this bill that is putting the US investment into focus for a lot of corporates, that they're incentivized to park the money in the United States. It's hard to see that European leaders will let 2023 pass them by without some counteractive measures. So how do we think about A, the underlying growth story as we've got it, B, the potential for some supersized action thanks to policymakers stepping in?
I think, first of all, Europe has been quite an expansionary fiscal policy mode for quite a while, especially due to the energy crisis that we've experienced. So the fiscal expansion within the different countries within Europe is already quite strong. But beyond that, I think not only the internalization of US manufacturing and US consumption within US, Europe is also betting in a way on the reopening of China, because it is going to give the positive tailwinds to European growth story.
The PMI data is still weak. Mm-hmm. It's still contractionary. at this stage. And in particular, I think the bits that are very worrying are the new business index, which is still somewhat below 50 at this point on the PMI series that we saw back last week. It's difficult on that basis to get really excited about stable growth returning to the EU anytime soon. But I guess my question would be, do we just ignore the growth numbers and the PMI data and focus on the markets for the time being? Because there does seem to be a real tailwind for equities in Europe at this point.
Yes, that's a very good observation, and in a way a great statement to put. We cannot completely ignore the growth story, but if you look into the way the markets are behaving, and especially the valuations that the European markets have experienced, there is this opportunity coming from the significant undervaluation of Europe compared to US. Again, it's not going to be a double-digit amazing returns with a great growth story. This is more around how can we float in a significantly difficult year ahead in 2023. That's why what we think is that a world outside of US will outperform US, and Europe within its own, in relative terms, in equities, will also outperform due to the fact that there's a value factor in European equities significantly more than US.